tuning in to Talking Point. I'm your host, Neeraj Shah, and the conversation today, the talking point today, is what could be the pulls and pressures around the cement space. And our guest today is Mr. Mahendra Singhi of Dalmia Bharat. He needs no introduction. We'll talk to him about the quarterly numbers as well. It's also as much a conversation about what's happening within the space. Mr. Singhi, great having you. Thanks for joining in. I hope all is safe with you and everybody around.
Happy morning, Neeraj, and happy morning, all viewers. It's always great pleasure to have enriched conversation with you. Everything is safe. God has been kind to
Right.
all of us, and we see a good time ahead for India and economy.
Okay. Now, albeit aided by a base effect in the corresponding quarter last year, you've shown a strong 34% volume growth. My question today was, or rather, I want to start off by asking you, how sustainable could this be? Because progressively, the quarters in the last year, while they had pent-up demand, still had slower growth compared to a normal year, so to say, I would reckon, even though there was a bounce back. So
Yes.
how sustainable are these volume growth numbers? Also in light of the fact that while we are coming out of an unlock 2.0, so to say, there is a massive pressure of monsoons across the country, I would presume.
Yes. So one, I would say these 33 or 34% growth or 40% growth or 28% growth, these are not normal number because they are on very low base. But at the same time, if we consider that last year would have been also a normal month, normal year, then in general it looks like that cement industry may grow by 7 to 10%. Like what last year we saw that there has been a 10 to 12% degrowth in Indian cement sector, and against that we could grew by 6% because of various steps we took to start up our operations very fast. So now 34% won't be the growth for the year, but yes, what we are committing is that it will be more than the industry growth for Dalmia cement per se. Now, from cement industry point of view, I would again say that if we consider last year's actual number, then the growth may be around, say, 15 to 18%.
Okay. Okay, fair call. And are you sensing some pressures in the current quarter, Mr. Singhi, because of the monsoons?
Yes, normally second quarter
Is anyways good.
is always a monsoon period for most of the country, and those are the normal months, and that's why we say that cement is a cyclical business, it's
Uh-huh.
seasonal business. So it's always good in first quarter and last quarter, but at the same time, yes, recovery again starts maybe in the month of September and October, and more particularly the regions which are eastern region or part of southern region, they get affected by the monsoon. But at the same time, I think we expect that from September itself, one, more impact of pent-up demand, and second, once the vaccination goes in a big way, then the confidence will go up and more activities will start, including the construction activities. So to us, it looks like, except God forbids, nothing else happens. Slowly, that bump up in demand, bump up in economy should start from September.
Okay, so sir, what you're saying is that for you, for example, in the key markets, the evidence is still, the jury is still out there, because I know that some of your peers who supply in a big way in the western region have said that despite the fact that yes, this is a monsoon quarter, compared to normal monsoon quarters, this time around the performance is a bit, the offtake is a bit weak because of the incessant rains. For you, you'll be able to say this confidently only after the months of September and October. Would that be a fair assessment?
So I would say that part of the our sales, which is in southern part, it is northeastern part, it will be better. And there may be some pressure in east, but then jury is known to us that this is how it happens every year. It's not a new phenomena.
Okay, fair call. What about pricing, sir? There was a sharp increase in, I think, both of your key markets, which is south and east. in the quarter gone by? Have prices normalized? Are they steady? Have they been rolled back? Can you give us some assessment?
So all the time we do say that all prices, whenever it is, they are the normal price. Now it's all scenario of demand and supply, as well as the visibility of next 1 or 2 months. And if there is a stability, say like in south, you would find that there is a stability. So slowly price remain stable, and slowly it steps up. But in east, many times you would find, because of the cyclical part more in few months, so there is always push on the price in these months. So to some extent, prices have again gone down, but I'm sure in a month or two they would regain. And if in totality also, if we look for last 2 years or last 5 years, in general, you would find the price increase has only been 1 to 2%.
No, so okay, which I agree, sir, and I'll come to the long trend in just a moment. I'm just trying to first get a sense of the short term, even though it's not maybe prudent to look at it on a quarter-on-quarter, but I'm still trying to understand.
Yes.
Do you believe that this monsoon quarter, which is July, August, September, could have the dual effect of maybe lower offtake, if at all, but though in your key markets it's still not as much, but pricing certainly would be substantially lower because of the rollbacks in the eastern region. So average pricing for you in July, August, September, would it be lower than the average pricing for the months of April, May, June?
I wouldn't say substantially, and I wouldn't say it will be only for Dalmia Cement, but it will be for the all players who are operating in East. There may be some impact, but nothing substantial.
Nothing substantial. Okay, great. Now, the interesting thing was what I was looking at on the operational metrics. Now, there was a marginal growth in EBITDA margins. I believe 14% is what you've done. Now, when I looked at the estimates of the notes which came out post your results, everybody's upped the EBITDA estimates for you by 9%, 10% to 15% for FY22-23. A large portion of that is on account of what they believe you will do, which is higher margins. Now, would you say that would be a correct assessment? Because I thought that higher fuel costs and higher packaging costs would actually impact margins negatively. And here are notes which are saying that your margins will actually inch up for both FY22 and 23. Can you throw some perspective here?
Yes, I would say that our margin for the quarter has been 27%, which is fairly good, and 27% EBITDA margin for the quarter, and that speaks high of few companies who are efficient cement companies. And then these margins have come up because of few reasons. One, on account of volume also, and second, we could also take proactive steps to manage the cost of fuel. Like petcoke and imported coal, which has prices gone up very high. What we could do is that we brought down the percentage of petcoke from say 70% to 46% in our mix, and in the month of June we could even bring it down to 36%. Secondly, we knew that we have to take care of the volatility of the prices. So since last 2 years, we have been working in a big way how to use the alternate fuel, which in our company we call it a green fuel, which has low CO2 emission, and at the same time a price can be predicted for better time. So this quarter we have used 9.1% as green fuel, and this is in the line of our commitment that we will be carbon negative by 2040. So time and again, we have to bring down our carbon footprint. So managing green fuel, and second, I would say bringing down percentage of petcoke to 46%. That has helped us in our power and fuel cost to some extent. And at the same time, now we are working to produce more and more blended cement. So Mr. Neeraj, you would be happy that today our blended cement, which is also a green cement, that percentage is 80% in our case. So that has also helped us to contain the cost. And third, we know that sometimes slag prices may go up, sometimes fuel prices may go up. So we are taking now all proactive steps so as to work on green power. It means we are now putting more and more waste heat recovery system to generate power. That second is we have now started installing solar power plant, and in a year's time we'll have about 87 megawatt as solar power plant capacity. And thirdly, on green fuel. In addition to this, also we are also exploring various green raw material, which means how it can bring down the usage of limestone,
Interesting.
because burning of limestone is a major source, one of cost also, and second also of the carbon footprint.
Carbon footprint. Okay. So you do agree, you do believe that in addition to, of course, the green initiatives, which are great, but all of these also will help you in upping your margin performance for FY22 and 23 as well. Forget the long term.
Yes, I would say these cost initiatives, these green initiatives will take care of managing the margin. You know, this margin depends on major three parts.
Sure.
One is the cost, second the price, and third is the volume. So on volume part, on cost part, we are quite confident. And price, looking to the scenario, it looks like it should be better in time to come. Because we are not player of a month or two or a quarter.
Yeah, of course. No, I agree, and I'll come to that vision plan as well in just a moment from now. But just a couple of things. I mean, okay, let's kind of talk about it. The capacity additions that you announced. I mean, two things were a bit surprising, if you will. The large clinker addition, because you haven't done too much of clinker capacity addition in the last 5-6 years, right? Except for one odd instance, if I'm not wrong. So it's a fairly large addition that you've announced, and some of the reports, not all, but some of the notes were expressing this, how do I say, not concern, but apprehension that why is it that Dalmia Bharat is announcing such a large capacity expansion so aggressively? Can't it be spread out? Any thoughts here?
Yes, I would say it is spread out. Now, one, in FY20, we increased our clinkerization capacity by more than 3 million ton in East. And you would be happy to know that that line in Rajgangpur in Odisha, that is now the world's one of the most efficient clinkerization plant, because of the lowest heat consumption, lowest power consumption. And based on that experience also, we thought that we should make all our kilns, all our clinkerization plant more efficient. And that's why we are now increasing our clinkerization capacity only by 4.1 million ton in 2 years' time. So it's not that big. And at the same time, our capacity, which is 31 million ton as of 1st April, we are taking it to 38 million ton. And those projects are already in process. They are not new projects. They are already in the process. And balance 10 million ton, we are adding cement grinding capacity based on our higher clinker additions which we are putting up. So in totality, you will find that in 48.5 is the capacity which we are targeting for March 23. And now, if you look at the last 7 years or so, from say FY23 to FY17 or 18, it is spread out. Now, there would be jumps in a year or 2 or 3. So that does happen.
And would you believe that for almost all of these capacity additions, you will not need any major equity fundraising, or would you? And I'm not saying either is bad, but I'm just looking at your history and trying to figure out, would you need equity fundraising or not really?
So Neeraj, I'll answer in 2 ways. One, first time we have come out with a capital allocation policy to assure all our stakeholders that this is the way we would be working. And this is the first cement company in Indian cement sector which has come out with capital allocation policy publicly. And in that, we have said that based on our aspiration of capex improvement, based on our aspiration to invest in green technologies, based on to reward our shareholders in a predictable way, we have said that with this expansion capex, we would not go beyond net debt to EBITDA of 2. So, and for that too, we won't require any new equity. Most of the time, it will be funded by one internal accruals as well the debts, and maybe for FY 23, our net debt to EBITDA may not go even beyond 1.5. But of course, we have said also very openly that if at all any acquisition opportunities comes, not now, any time, then we will explore that possibility. And if we have to breach also too, we will bring it back. But at the moment, we are quite confident that with 48.5 million ton capacity, one, of course, no equity is required, and no debt is required, which will take our net debt to EBITDA beyond 2.
Okay, that's enough explanation, Mr. Singhi. Just wondering, is there, in a nutshell, is there an acquisition opportunity around?
No,
nothing as yet. Okay, this is only enabling thing.
Yes.
Okay.
Neeraj, this time what we have done,
please.
We have tried to show a predictability in our operations, in our capex, in our rewarding shareholders, and that's why we have said that we'll be growing in a sustainable way. We'll be rewarding in a sustainable way.
Okay.
We'll be managing finance with financial prudency and in sustainable way.
And you would grow to over 100 MT, or maybe 110 to 130 MT also in a sustainable way.
You are so right, and this is in the process of our green journey, and that's why we are the first company who have announced now that in next 5 years we would be 100% green cement manufacturing company, which in our cement sector terminology we call blended cement. So though we are already 80%, but now all the investment which would be made, that all would be made for blended cement. And we have also in the past committed that we are not going to invest any money now in thermal power plants, coal power plants.
Got it. Wow. Keep it up, Mr. Singhi. All of this is great to know. And I wish you all the best for the quarters ahead, for the vision that you announced to grow as large as you are saying, and for the newer markets that you will enter into, which is not newer really, but not quite your core markets, which is Eastern and South, since you have announced the foray into North and Central, or will be announcing. So all the best for that as well. Thanks so much for talking to us.
And Mr. Neeraj, I would just like to highlight that, now Government of India has also appreciated the efforts of our group, and they have appointed Mr. Dalmia, our Managing Director of Dalmia Bharat, as the Chairman of Development Council of Cement Industry, in which there are 25 members from cement industry also and government also, to work on circular economy, to work on various initiatives which can bring pride to India. And similarly, we have been also appointed as COP26 business leader. COP26 for climate change. There are 16 global business leaders, and we are one of them. And lastly, even for creating awareness about the carbon, World Bank Group has appointed me also as one of the 2 carbon pricing champion, so that we go on working on climate change. We go on working to make future of our grandchildren very safe, very sustainable.
Well, actually on that, I wish you even more luck and even more expertise, Mr. Singhi. Keep that up. Congratulations on that. And yes, make the world a better place as you continue your business. Thank you so much for speaking to us today. Thank you, sir. And viewers, thanks for tuning in to this broadcast.